Hi there, I'm Mark Sebastian, founder of OptionPit.com, and this is the AM Volatility Report. Reminder, this is for educational purposes only. None of this should be considered investment advice. Consult your financial professional. Options have risk. Welcome to Option Pit, folks. Well, as you can see, a little bit of a down day. You got the market vol down, Russell down a bit. That's kind of the concerning one. SPX flattish. VVIX still above 80, still holding. The futures are down though, and they continue to be down. It's been just shocking the way VIX futures have continued to just kind of deteriorate here with all the things going on. These Brexit polls starting to look bad. I think that's going to change if we get a couple of more polls and this thing becomes believable. We had some bad economic numbers. Nobody's raising rates. So the question is, are the numbers that Goldilocks number where rates don't need to go up, but the economy is still growing? And I think, I don't know, I think is the answer. And I'm not sure that we want that Goldilocks number. There are some things that kind of stink about where volatility is and where vol might go, but it looks like the Fed, the way the market is pricing itself, rates are not going anywhere anytime soon. All right, and I'm not sure that's the best play. I think there's a real opportunity to fade rates, fade things like TLT and IEF. IEF is the 7 to 10 year, which has had a very strong move. And if you look, it's not like the vol of these names is high. Right? Not as low as it got, but pretty darn low, right near a 1-year low. All right, and the underlying, nice gap higher. It's sitting at a 3-month high, 6-month, almost to a 6-month high, and at a 1-year high. I think these both are starting to look like fades, especially IEF. So if you look at the United Kingdom, I've been shocked the way this thing has rallied as things have kind of gotten worse in the Brexit. I mean, it's almost like they want things to go higher with this vote. I guess they maybe don't believe things. Europe continues to rally too, so it's been kind of full steam ahead for all the markets. I'm not sure that lasts. I think we got a couple of days left of this, but I think the way I would set things up, I would not be leaning short SPY because it could move higher, a lot higher. But I can also set up cheap hedges using VIX. So the idea of going long makes a lot of sense to me. So for instance, a trade I might look to do could be with VIX 13.5 and the July future around 17. I mean, if I did the 18, 22, 1x2, and then went long SPY calls, that would be a very interesting way of hedging off risk here, and would be a very, I think, a smart way to play volatility rallying and the market rallying, or the market rallying and volatility cutting sitting down. This hedge doesn't cost very much, and it gives you, a good hedge all the way through non-farms next month, which is all I really need. So that's how I would set these things up, and that's how I'd be looking to play the market. Another alternative that we like is short the market, short VXX or UVXY as a pair trade. It's been one of our real winners and one that we really like, and has continued to perform exceptionally well. Those are the kind of the trades that we're going to be looking at and playing with. You know, some of the names that we pointed out for potential short squeeze, Weight Watchers, have not happened yet, but might. And we're watching PayPal as that vol continues to stay low. So we want to keep an eye on that stuff. All right. Now, if you got any questions, don't forget we've got our Iron Condor class coming up. Go to optionpit.com/condor. It starts this Saturday. This is free for Option Pit Live members, but only $167 if you are not a member, and it's going to be a great 4+ hour course starting Saturday. All right, folks, have a great day. Email me, mark@optionpit.com. Call me 888-TRADE-01. Have a good one, folks.